Hello and welcome to another episode of TaxProTalk or
Hashtag
#TPT.
TBT. Yeah, Mike, thank you for joining us. Mike is our CPA tax attorney and leads our tax development teams in understanding the legislation. And so thank you for joining us here today, Mike.
Hi guys, great to be here.
And today we want to pick your brain a little bit about some of the business provisions in the CARES Act that just passed in March of this year. So share with us some of the stimulus and the tax implications that were in that CARES Act for small businesses.
Okay, great. Yeah, off the top, there's two big ones that I want to go over. One of them is the government delayed the payment of the employer payroll taxes, and that's the employer portion of the Social Security and the Medicare. They deferred that from March 27th all the way through 2020. So basically they're saying to business owners, you don't have to pay your payroll taxes on the employer portion until the end of the year. So it's going to help them with cash flow.
That's a really big change. We've never had something like that before. So that's gonna change up these 941s and the deposit rules and stuff. So probably we've got some more guidance that's going to be coming out about how all that's going to work, right?
That's correct.
Okay, great. And you mentioned self-employed too. So do self-employed people who are reporting on a Schedule C, do they get some benefit there?
I believe they do, Jim. I didn't read anything specific, but I'm pretty sure they're covered since they do pay the employer and the employee portion. So I think their employer portion would be covered.
Okay, all right, great. What else is in there for the business tax provisions?
Okay, and I kind of alluded to two big provisions. The first one was, again, that deferral of the employer payroll taxes. The second one is, wanted to point out, there's a new employee retention credit for employers. Again, what's the government trying to do there? Help companies to retain their employees instead of laying them off, right? How does this work? The first $10,000 of wages paid after March 12th, 2020 through year end is a refundable credit against payroll taxes for 50% of the wages. So company basically gets a $5,000 benefit for keeping people on, which they otherwise may have laid off. And there's two kind of conditions, or one condition, for operations that have been fully or partially suspended from government order, or more than 50% a reduction in receipts. So there must be some type of COVID-19 type hardship from the company. Again, like Jim pointed out, there is more guidance coming in on that.
Okay, so that would apply to a lot of our businesses, retail places that have been shut down and they can no longer do any work, or any other business that may have had a 50% reduction in terms of their gross receipts because of this COVID issue.
That's correct.
Okay, all right. Again, goal is to keep folks employed, and that sounds like a pretty good credit. So as tax practitioners, you're really going to want to ask a lot of questions and make sure that you're coaching your clients through this to make sure you're keeping the right information, the right records and things to take advantage of that credit.
Yes.
All right. What else is in there for the business provisions that helps small businesses?
Yes, Jim, there's a smattering of other provisions, and I put them in some separate buckets. The first bucket deals with the government basically loosened up some limitations that were part of the Tax Cuts and Jobs Act tax reform that we saw a couple of years ago. So they basically relaxed some of those, and I'll kind of go through them rather quickly here. The first one is the government temporarily repeals the taxable income limit for NOLs arising after 2018. So it's sort of retrospective to some extent. Another one, net operating losses arising in 2019 and 2020 can be carried back 5 years. Under tax reform, you couldn't carry back, only forward. Right. Another one, non-corporate taxpayers can deduct excess business losses arising in 2018, 2020. Tax reform kind of curtailed that and said, no, you have to wait and carry that over. Well, this package, the CARES Act, is allowing you to go ahead and deduct those. And then the last pillar there is interest expense limit. They bumped it up from 30% to 50% for 2019 and 2020. Again, under tax reform, you couldn't deduct interest expense except to the extent that it didn't exceed 30% of the income.
Right. And again, with lower gross receipts and things this year, a lot of those, might have limited deductions there. So those sound like they could be really helpful, and being able to carry back NOLs in a year like this where a lot of companies are going to feel some serious losses could be really helpful. So some good planning opportunities to look at and think about with your taxpayer clients. So great information there. Anything else you want to share with us about that CARES Act and things that preparers should know today? Certainly we're going to get more into this. We'll deliver more education over time, but any final thoughts there, Mike?
Yeah, Jim, it's kind of a long act, and there is some more relief. One of these items is really cool. I want to point out, we've been waiting for a technical correction since the tax reform got passed back in 2018. Finally, It got through. So there is a technical correction. I'm sure everyone knows about it. It's qualified improvement property. There was a glitch in the legislation that said you had to write it off over 39 years. Now, finally, what they really meant was you get to write it off over 15 years, and it is retroactive back to property placed in service after 12/31/2017. So finally.
Yep. All right. Good to know they slipped that one in there. That's helpful. So, all right. Well, awesome. Thank you so much for sharing with us, Mike. And I'm sure that we will have you back soon because this is going to be a very busy tax legislation update year. So thank you very much.
You're welcome. Thanks for having me.
Thank you, Mike. And as always, everyone, if you want more information, we've got some links down below. And while you're down there, please hit the like button and be sure to subscribe for the most up-to-date information. Thank you, everyone, for joining us today on TaxProTalk or
hashtag TPT.
Thank you for watching TaxProTalk, brought to you by Intuit Pro Connect for tax and accounting professionals.